Hello everyone and welcome back to the channel. This video is part of the Fundex Decision Framework, a 5-part series where I take you through the decisions I make before every trade. My goal isn't to teach you another trading strategy. It's to help you think like a professional trader by following a structured decision-making process. In the last episode, we talked about why most traders enter trades too early and why waiting for confirmation can completely change your trading results. Today I want to answer another important question. How do I decide my market bias before the trading week even begins? One of the biggest mistakes traders make is opening their charts on Monday morning and immediately looking for trades. By that point, they're already reacting to the market. Professional traders don't start preparing on Monday. They prepare before the week even begins. Every weekend I spend time analyzing the markets. Not because I'm trying to predict where price will go next, but because I want to prepare for the different scenarios the market may present. That preparation gives me confidence, it helps me stay patient, and it prevents emotional decision making during the trading week. Before I show you my process, I want to make one thing very clear. I don't try to predict the market. No one knows exactly what price will do next. Instead, I prepare for different possibilities. Trading isn't about being right. It's about being prepared. The first chart I always start with is the monthly chart. The monthly chart gives me the bigger picture. I'm not looking for trade entries. I'm simply asking myself a few questions. Where is price trading relative to previous major highs and lows? Is the market approaching an important area? Is there anything on the higher time frame that I should be aware of before I start looking for opportunities? The monthly chart gives me context. It reminds me not to become distracted by the smaller movements that happen during the trading week. Once I understand the bigger picture, I move to the weekly chart. This is where I begin preparing for the week ahead. The first thing I do is mark the previous week's high and the previous week's low. These levels become very important reference points throughout the week. I also identify significant swing highs and swing lows. Then I study the overall market structure. Is the market creating higher highs and higher lows, or lower highs and lower lows? Has anything changed that I should pay attention to? Again, I'm still not looking for a trade. I'm simply building context. After that, I move to the daily chart. This is where the market starts telling a more detailed story. I'm looking at how price is developing. Is the market trending? Is it ranging? Is it approaching an important level? Has anything happened recently that could influence the coming week? The daily chart helps me connect the bigger picture with what may happen over the next few trading sessions. Now comes the most important part of my weekly preparation. I don't create one prediction. I create different scenarios. For example, if price takes the previous week's high, what will I be looking for? If price sweeps the previous week's low, how will I respond? If the market stays inside last week's range, will I trade at all? Preparing different scenarios allows me to stay flexible. Instead of reacting emotionally, I'm simply responding to what the market is showing me. Once the trading week begins, I spend most of my time on the 4-hour and 1-hour charts. These are my execution time frames. By then, the hard work has already been done. I already know the important levels. I already understand the bigger picture. I already have different scenarios prepared. Now I'm simply waiting for the market to confirm one of those scenarios before making any trading decision. One of the biggest lessons I've learned over the years is this. Confidence doesn't come from predicting the market. Confidence comes from preparation. The better you prepare before the week begins, the calmer your decisions become during the trading week. And calmer decisions usually lead to better trading performance. Remember, a professional trader doesn't start the week by asking, "What should I trade?" A professional trader asks, "What scenarios has the market created and how will I respond if one of them unfolds?" That small shift in thinking can completely change the way you approach the markets. In the next episode, we'll build on today's lesson. Now that we know how to prepare for the week, the next question becomes, how do we know whether a trade location is actually worth our attention? I'll take you through the exact liquidity checklist I complete before every trade and explain how it helps me filter out low-quality setups and focus only on opportunities that align with my trading process. If you found this video helpful, I'd really appreciate it if you subscribe to the channel. If you'd like to continue learning alongside other traders, you're also welcome to join the free Fundex Trading Academy community. Inside, you'll find free trading lessons, weekly market reviews, prop firm updates, trading resources, and a community of traders working towards the same goal of becoming consistently profitable. You'll find the link in the description below. Until next time, remember, trading is a process, not a prediction. Master the market, master yourself.